Okay, perfect. Welcome, everybody. Joshua Salvetti. Welcome to the High Performance Trader Weekly Recap. We're going to break into the week. We're going to break into trades we took, why we took them. I really want to focus this recap on why we're trading, right? Why we're here, what our clear goal is, right? Because obviously we're all here to make money. We're all here to do well, but it's like I'm noticing a lot of times I'm starting to see trading errors whenever I link my outcomes to things I can't control, right? Like price action, like getting a profitable trade, right? There's some things that we just cannot control. And because of that, we should not link our goals to this, right? So I really, really want to break down. Me and Darren got a good session. We're going to be breaking down, we're going to be diving pretty internal, meaning where we're going wrong, right? Because we all understand strategy, right? We all understand the how to read the markets, how to understand the market's language, right? I just made a video I just posted on YouTube. It's all about understanding the market's language, the way the market communicates, but more importantly, your relationship with the market. Is it mysterious? Do you journal? Not just journal, but do you actually dive into your journal and notice, wow, I keep making this mistake, right? Like recently, I was going through my journal for the year, looking at my results and going, hey, if I had done this differently, I would have done better. Or if I've done this differently, I would have done worse, right? So it's really important, that whole problem solving process. It's super important to become aware of this, right? And not just go through the motions. Oh, I posted my loss in there. Maybe tomorrow will be better, right? I did that for so long and it just continuously sucks. You don't get better until you change. So trading is literally a byproduct of how well you can control your behaviors. So on that note, right, it's my little rant. We're going to be diving into the week and just trades we took. So, welcome. Thank you, everyone, for coming. Taking time out of your Saturday to learn and become better traders, right? So that is the just of it. Okay. All right. So I've been trading SPX, right? So SPX is going to mirror SPY to the T. I still every morning go through a pre-market plan on QQQ and SPY. This is very important, right? And I know everyone's aware of this, but it is extremely important. One of the criteria I posted, right? Because I posted how I grade my trade performance. One of those criteria is, did I follow my pre-market plan? And you're going to see in some scenarios today, right? Times when you follow your pre-market plan, you trade way better, right? And there's a couple reasons why that is, right? It's because pre-market 9:30 bell hasn't gone off yet. You're completely objective, right? You're not connected to the outcome yet, right? You don't have any money on the line, right? So you're not nervous. You're in the right state of mind. It's easy for you to go, hey, if this level breaks, then I'm going up. If this level breaks, I'm going down, right? And that's let me see here. It's really important to do, right? It's so important to do, right, Darren? You want to touch on that real quick?
Yeah. So, I mean, I could go into it super deep, but just before you get started, if you're not prepared for the day and you're just pulling up your screens 10 minutes before the market,
yeah, you're done.
That is not enough time to develop your plan and come up with a strategy for the day. Come up with these if-then statements. If this happens, then this happens. Because at that point, you're playing catch-up, you're scrambling, and you're in a way behind. So you're waiting for the market to do something. It's going to give you something, and then you're going to feel some type of way about it, versus coming up with a plan and saying either this happens or I don't trade. If I don't see this, or I see something completely different, then I have to wait, maybe go with plan B, or maybe I don't even trade that day.
Right.
So, at the very least, you need to have half an hour preparation before the market's open. And if you can't afford to do that, you're busy or something, I would strongly suggest just paper trading or just not trading at all or just watching. But to just rock up and think that you can just, roll out of bed and just look at the screens that. I'm not saying that, you definitely need that preparation.
Yes.
So.
Yeah, exactly. Well, it's the reality of the situation, right? And what it does, I like how you said that if-then statement, right? If this happens, then this. If this happens, then this, right? See, that's super important for me because that is how I approach every single trade. If I'm trying to react off current market information, meaning the information in front of me. I'm trying to react off that information. If I don't have a pre-market plan, I'm not going to do that. I'm going to constantly just be trying to trade on a whim, and that's not gonna work well for me. Not at all. You know what I mean? It's just really important to have that planned out, and just be completely ready and aware of what it can bring to you, right? So this was Monday over here on SPY, right? So this was coming off of the holiday weekend, and it was really just hold on, let me go like this. Okay. So
yeah, it took us a while to get going on Monday.
Yeah,
a little bit of indecision here.
Yeah, the trade I took was basically this little okie doke below pre-market low. We were below previous day low, right? So at this point, right, when you're below open print, so price rallies off the rip and then comes right back down below previous day low. And now we're coming up for a retest. I'm looking for a retest off open print, maybe take a short play down to this 45365 level. This was a super important level identified on the daily time frame, right? So this was a break and retest on the daily time frame. I'm bullish if once again, if buyers can show up here. But my first initial goal was to make a short play maybe into this level. And as the market was playing out, I started to see strength develop at this pre-market level, right? So it's, once again, it's really important to not, you may be bearish right here, but what is the market telling you? What's the language? What's she saying, right? So at this point, I'm bearish, but I'm not getting a clean retest. We find some strength, right? And then we rip up in the previous day low, get a nice little retest here, take the market long, targeting end of day, and price literally rips right into the top, comes down. We get this candle. I stop out of the trade at this point because going into this week, I was super hell-bent on I take profits if structure breaks. If structure breaks, I'm out of the trade. See, we have to get to the point where we're able to take what we call base hit. Now, a base hit is you identified buyers taking control of the scenario, right? That's the break and retest off open print here and off previous day low, right? This is definitely my trading criteria. Looking for a move, closing the gap. Did it happen? No. Is that out of my control? Yes. All what I can control is my criteria. All what I can control is when I get in the trade and when I get out of the trade. And most importantly, why? And the more you can do this, you're going to see a lot more consistency in your results, right? Because, if you just entered this trade long for any other reason, maybe it wasn't your criteria and you made 30%, 40% for whatever reason, right? That's rewarding yourself for not following any structured approach. And that's going to lead to inconsistencies in the market. So that was the only trade I took on Monday. And this is the thing. I'm okay with that. You know what I mean? If you're not getting, what do I call? Like, if you're not seeing any criteria, if you're not seeing anything you like, there's nothing, there's nothing telling you have to put on a trade. There's no rule in the handbook saying until you make money, you're failing today. You know what I'm saying? So I'm really trying to get to the point in my trading where I see my edge, I act. It doesn't go my way. Maybe I walk away for the rest of the day. I don't know. It doesn't matter. You know what I mean? Just being kind of formless there is going to help you a lot more. So that was the only trade I took that day. Made about, I think, 12% and just walked away. So that was pretty much it for me. Darren, what'd you do on?
So I was watching Qs on Monday. There was actually a nice little retest off of open print. It was just very short-lived. And basically, I didn't even hit my 1 to 3 risk to reward because I just got out of this. I just didn't like all of the selling that I was seeing at the highs on QQQ. So, what we did have was an open print retest, and then I caught this tiny little scalp, probably like 20%.
Yeah.
Then that was it for the day.
Yeah.
But it's a Monday, and it was after the holidays, so
you're talking this right here.
I wasn't like, yeah.
Nice.
Wait a minute. Why does that look different?
This is 11:27. I got that.
27. Yeah,
that's it.
So 10:24 was the retest to open print. Yeah, so I caught that little run up to high of day.
Nice.
It wasn't. Yeah, it was whatever.
Well,
but basically, I like what you said about giving yourself permission to get out of the trade when you're not seeing like appropriate price action.
Right.
Like, you don't have to stay in if you're not seeing what you like. And you have full control to just get out.
Yeah. And it's like going back to why we're here today, right? So I used to link becoming a successful trader to winning. I need to have a good trade, need to have a good day. And then I would link a good trade, a good day to a monster return, right? So because, we're trend traders. I catch the trend. Sometimes I capture 200%, 300%, sometimes more, right? So it's like I used to link that winning feeling, right? That accomplishment, that quote unquote good day to a very massive, large trade. And then I found stomping out of these positions here, right, on SPY was extremely hard for me because we would get a beautiful setup here off open print, nice little retest, go long, and then it would start to reverse and I would stay in the trade and then maybe get stomped out, take a 30% loss, instead of locking in a 10% trade. And it's like the difference between a 30% loss in a break even or a 10% return is everything, especially when you start trading large size. See, a lot of times this little concept or this concept goes overlooked. See, when you're trading, it doesn't matter your account size, but say you're trading somewhat smaller of an account, when you're up 10%, on one contract, that may be $10, right? You don't want to call it a day after only making 10 or only being up $10, right? So what do? You continue to hold. And then as price continues to go against you, now you take a 30% loss and now you're frustrated. Now you're red for the day. Instead, right, you have to become aware of the fact that you cannot control what the market's going to do. And since you can't control it, you cannot link your quote unquote good feeling to you cannot just link my accomplishment to a good trade, right? So I've really been trying to dive deep into why I'm putting on the trades I'm taking, can I control them, etc., right? So that was the first trade of the week. And my goal, like I said, was to remain like in control of why I'm taking trades, which led us to Tuesday, right? So Tuesday, I just made a video.
I have one more thing to say about the beginning of Monday. So if you look at the beginning on Monday on QQQ and SPY, if you see it chopping back and forth like that, and it's just causing you to be frustrated or confused, it's totally okay to raise your criteria and say, okay, I'm not messing around with this chop. I'm only playing this if we break out of that consolidation. So if price action is making sense to you, it's following your pre-market plan, then great, just go along with it. But if it's confusing you with this back and forth chop, it's totally okay to raise your standard and be like, okay, I'm changing my entry criteria. I need much more confirmation to get in because of all the indecision that I see. So that's another thing which helped me on Monday. When I saw things going back and forth, I'm like, all right, I'm not messing with this until I see a clear move.
Right.
Like clear. And that way I can protect myself.
Exactly. And it's like, what is chop, right? It's basically it's indecision in the market, right? And yeah, you nailed that. Perfect. Increase your criteria, right? Be like, listen, I'm not playing with this until this, right? And then, so now what I'm doing is I'm just kind of lining up my critical levels on SPX because this was Tuesday's trade. It was a really, really good trade. And I just kind of want to break down why. So, you know what? I'm going to chart it on SPY just because that's what most of us are trading. Hold on. Give me 2 seconds here. Okay. So notice this yellow line right here. Weekly time frame bull retest, right? What does that mean? So let me just really show you guys real quick because it played an extremely vital role. That is this level, right? So we are big continuation break and retest traders. The reason being is because the market's formed on structure. When it's structural, it's making sense. It's the auction between buyers and sellers. So the break and retest is going to show you the conditions of the market, meaning a bullish break and retest is validating bullish conditions. And in that scenario, we want to trade with buyers, right? So that was where I identified this level pre-market. Now, remember we were talking about pre-market plan. Find a level that's going to really distinguish conditions for you so that you can make the proper trades and trade with the conditions of the market. Now, without going too far off topic, some of my worst trading I've ever done was because I couldn't trade with the conditions of the market. I kept trying to catch reversals, etc. So going into this day, right? We're opening below previous day low, which is pretty bearish, right? But we are starting to play with this level. Now, first thing I want to point out here is it's one thing to identify a level. It's next to identify the chart pattern. See, the chart pattern validates the behavior of the people that actually control price. The banks, the extremely rich and wealthy, people with large capital, they control price action. So the chart pattern is going to show you, once again, bullish chart pattern at a bullish level. I'm going to remain bullish until otherwise. See, that's how I try to approach the market. It's always 50-50 until something happens, right? So my goal was to be like, okay, we're opening below end of day. We could see a gap fill up to end of day. We could see a gap or a rally up to previous day high. And so be it, right? What do I need to see to put on longs? See, that's how I try to approach the market. Right? So as you can see, how we started here, we got some pretty all right rejection. Let me whip out the 2-minute. We get some pretty good sellers defending previous day low, right? Like right here, I'm pretty bearish, but I'm not taking the short. And it's because 2 words, risk, reward, right? See, risk reward is going to be your best friend as you become a good day trader, right? Just because an opportunity presents itself here doesn't mean you have to take it. I wasn't willing to play shorts into an area of demand, especially an area that's had lots of volume and lots of previous price action. So instead, I'm stagnant. I'm sitting on my hands and I'm going, okay, for me to be bullish here, which previous day low actually lined up extremely well with open print. Look, Darren, that's crazy. Literally.
It might have been exactly. Yeah.
Exact. Yeah. Look at open print is 45408. Previous day low is 09. No, it was 08. It was 08. That's crazy on that candle. So once again, why are these levels important? Because they hold a lot of volume, right? A lot of volume happens at these levels, the lows, the highs, the opens, the closes. So if it's our goal to understand the context and conditions of the market, we must watch these levels. See, it's one thing for me to tell you to watch previous day low. It's another thing for you to understand why, right? And that's exactly what we're trying to do is be like, okay, this is why there's lots of volume here. And the banks are going to make decisions here that are going to control the context for me to put on a trade, right? So now at this point, I'm going, okay, what do I need to see here? Look at the volume that came into the market right at this level, right? We started to get more volume. We started to get some strength, but not bullish structure yet. I need to see bullish structure form. Then we get this lower high, right? So that is where I would call the shift kind of started to form, right? I'm still not willing to put on a trade yet, but the shift is starting to happen, helping me go, okay, we couldn't make a lower low. If you can't make a lower low, that's sometimes, at this point, I'm still like 60% bearish. And then I see we can't make a lower low. Now I'm about 50-50 again, right? And then we rifle right in the previous day low. That seller is still present. Okay. Then we make that higher low. And then we start to hover somewhat of an inverse head and shoulders at this level. We rip into previous day low, get a retest. This is my long. I'm long at this point. I think in the Discord I put my stop was at 453.90, right? So I'm really not risking a lot here. And the reason why, check this out, that was my stop, is I got it from that open candle, right? For me to stay thinking bullish, I want to, and it literally came 2-3 cents within my stop. But for me to remain bullish, I want to see bullish structure continue to hold. So if we fell below 453.90, that would have made, then that would mean that seller was still present. And then out of nowhere, boom, this thing just popped like crazy. This was a very, very intensely fast, about look at this, $1. How much is that? That's $1.70 move, rip all the way up to this level from previous price action, right? So just so everybody knows, I always gather my targets from previous price from the day before, pre-market, etc. So this thing rallied right up into 455.31, which leads me to my next point. Is I'm very big on taking profits based on structure. Now, going back to risk reward, you have to remain objective to what structure's telling you. In this scenario, structure's all the way back down at, I don't know, end of day, right? Like, so I'm not willing to give back this amount of profit to see if this is still bullish. This is very important. You need to be able to go, okay, at this point I'm up. I was up a lot. I traded on SPX. You have to be able to be like, okay, where does price need to go for me to get out of the trade? End of days down here. I ended up taking profits on, once I seen this candle start to reject, I just booked profits. And I'm okay with that entirely, because I did it out of the right. You said this perfect one time, Darren. It's not what you're doing, it's what you're thinking while you're doing it. That's going to help you become a much better trader, right? So that was my one and done for the day, right? Like we were talking about, I'm getting to the point where I'm trying to become a way more conserved trader. I don't need to take 2, 3, 4, 5 trades. This trade gave me over 224% return. Completely okay with that. So did this continue? Did this continue to rally?
This is the kind of thing.
So what? Sorry. You know what I mean? I'm not worried about this rally after. I'm sorry. Go ahead, Darren.
Yeah, no, so the price action before that big rip up, this is the kind of stuff that I screenshot. I'll zoom it in, and then I'll study that price action around previous day high and open print. And then I'll go back and look at it, and I'll say, this is what price looks like when sellers are giving up at a certain level. Obviously, there was some large buyers that came in and just blasted right through. But you can see that's what acceptance, like the price action around the previous day low and open print, that is what we call acceptance at a certain level. Rejection at a certain level looks completely different. And as you journal these things and look at them over and over again, you can begin to familiarize yourself with what it looks like when price is finding acceptance at a level. So let's say you didn't capture this move, fine. Screenshot it, and now you can go back and read it and study it.
Yeah.
So next time you see this kind of price action, you can start knowing, what things that it's signaling may happen next.
Right. Yeah, and that's the big thing for me, right? Is like, okay, a couple of weeks ago we were talking about profit taking and the importance of 1 to 3 risk reward, right? Once you hit your 1 to 3 risk reward, right, you have to ask yourself, what am I willing to risk now to see if this can go any further, right? And you have to be okay with that. One of the main tools I use is the 9-day EMA on the 5-minute, right? This is usually a pretty good indication of when a trend is starting to reverse, right? So as we're rallying into previous day high, the 9-day EMA is almost $1 away, right? We're very extended. I actually learned this from Todd as well. When you're really extended from a certain level, you have to ask yourself, am I willing to risk, I don't know, way more than maybe half my profits to see if this is going to still go my way? No. Okay. Out. There's always another opportunity. We need to become okay, like we were talking about in the beginning, with not feeling extremely good from one trade. It's like, okay, I seen my edge, I acted on it. So be it, on to the next. So that was it for me. But I mean, just to break down a little more analysis, I love how these levels play. They're storytellers if you could trade them correctly. And just to dive into structure a little bit more, we rally way past previous day high. And now check out how structure starts to form to the downside, right? First right here, right? There's that famous HPT pattern, right? The break, retest at the level, and we start to get sellers, right? Can't get past the level. The more you can see structure, the better trader you're going to be. The easier it's going to be for you to understand, do I, like, say you took this short on this retest, right? Where's your stomp out? Right above this level. And then as this thing continues to sell off, you just continuously form structure. Bam. And then look at that. The market's language, like we were talking about, is structure. And if it's not speaking structure, I'm not trading it. Right? So until we get above this, I really don't want to be bullish. I was looking at maybe possible re-entry here at previous day high. We didn't tag it, and we're still not holding structure. So at this point, sellers are still in control until otherwise. And then we started to sell, and I just love looking at the structure there. Now look at this one, right? Because the market's going to tell you something if you know what to look for. Then structure's made, but notice structure doesn't break. We need to break and hold underneath it, right? So it's like, it's just learning to understand this is going to help you with your entries and exits tremendously. So that was Tuesday. Is a really good day on the market. I was overall very proud of myself for, because one issue I've been dealing with is over trading, is making money, giving some back, right? So and especially when you start to increase size, actually, it doesn't even matter. You can trade one contract. It's not okay behavior to just dish money back for no reason, right? It's like we need to become okay with one trade, did well, so be it, right? Like if all you do is stare at your computer all day, it's not good, right? Like you need to how do I say it? You need to not, because if that's all you're doing is just staring at your computer, you're just going to link, oh, for me to have a good day, this needs to happen. For me to have a good day, this needs to happen, right? And that's challenging. It's going to cause you to make bad decisions, right? So, okay, here's the setup.
Also, the more that you're in a trade, the more that your perception is not objective. Because if you have money on the line, you're biased. There's nothing you can do about it. We all have emotions attached to money. So the more you're looking at price action with money attached to it, the more you're looking at it with a skewed perception versus having a completely clean and pure perception of price action when you're just watching it. Those are two completely different things, and it's very good to show yourself what it is like to watch price action with no bias. Yes. It's actually really, really interesting to watch what your mind does when you don't have any money on the line.
Yeah, it's crazy. And I like what you said before, Darren. We only have so much mental capital and like mental energy. So when you're extremely focused on the wrong things, you're wasting mental capital. Right? So once you can start to stop obsessing over things that are not matter, it opens up a lot of energy and thoughts and opportunity to really become, what's the word I'm looking for? Just, you'll start to use a lot more constructive energy to the right things. Your strategy, your, like some of the best trades I make, like I'm just, like you said, just completely unattached to the price action, to the outcome, right? It's like that's the goal. So the next day, Wednesday, we rally. Massive move up, way above previous day high, way above end of day. Now, this is really important. So every day that this happens, now, for this to make sense, I got to point out 453 or 45831. So 45831 was this level, right? Where is it? 45331 is the top of this candle. What's the top on this? It is, the high is 45816. Okay, so let me make that 458. I'll just do it like this. Ready? 45816. Okay, so going into this day, massive gap up. I have to watch this level. Once again, your pre-market plan. So this is what it looks like pre-market. We're rallying into a daily supply zone, meaning this is an area identified on the daily time frame over here where there was sellers. So I have to watch to see if those sellers come back. What do I need to see? Bullish scenario, right? Obviously, if we can continue in the pre-market plan, I said, looking for a healthy pullback into a level and then longs up to 45816 and then above. And then in a bearish scenario, a rally into 45816. And if we find sellers, I'm looking short. That was literally my pre-market plan. Now, this is a perfect example of not following your pre-market plan. So, well, I did, but not my first trade. So we open up, and let me put on pre-market data because that'll tell you why I took this trade. Very simple strategy. The break and the retest off pre-market high. Okay, so I have my eye on that 45816. My goal here is to play longs until that level. So what do I need to see to understand conditions are bullish? A break above pre-market high, a retest, and then I enter long here, SPX calls, stop below 45755, right? Maybe a little below it. And then we rally into 458, get met with some selling, and then we blast through it right into my target. Now, going back to the day before where I had a monster 242% return day, I'm somewhat associating a quote-unquote good trade with a monster trade because on this trade, I'm up 47% and failed to take profits. Now, as price rallies until my area, right, we close above it. Now, closing above a level sometimes will confuse you to think buyers are controlling the level. That's false. The retest at the level actually validates sellers stomping out, right? So that's the importance of the retest. The retest is actually confirmation that sellers are getting out of their positions, adding to the bullish condition. So it's just because we close above a level doesn't mean it's bullish, right? That's all I'm trying to get at. I let that play a role in my decision-making process, and I decided I'm going to stay in this trade. I didn't bump up my stop, which is my criteria, right? Is, once again, we can't control price. We can control where we get out. And I did not do that, right? So I left my stop in at break even, and I ended up getting caught on this candle. Now, going back to what we were talking about pre-market plan, right? If I came up with a pre-market plan with no money on the line, with no anxiety, complete objectivity, and it played out to a T, my bearish scenario, right? Now, price started to reject. I got stomped out. This nice little wedge was forming. And not only that, the amount of volume coming into selling was extremely, extremely high, right? So as price is selling off, we come right into open print and we sell through it. Now I'm looking for a short opportunity. And this happened very quickly, and I really don't recommend taking these sort of trades unless you're comfortable with them and you have proper size, right? Because this happened quick. I'll even whip it out on the 1 minute. This thing happened extremely fast where you had to have a lot of faith in the strategy to do this. Even on the 1 minute time frame, this rips up into the level and then starts to come down very quickly, right? So I'm willing to put on this trade, right? Once again, not my best trade, not my best entry, but I understood the conditions of the market and I had my risk intact. If that is, the market's, it's not the market's job to give you perfect opportunities, right? The market's just going to do its thing. It's going to go fast. It's going to go slow. It's up to us to identify an opportunity that we deem profitable or high probability, right? So at this point, I put on the trade. My stop is above this level. You can see here, I'm still only risking about 20 to 30 cents to see if this trade plays out in my favor. And then we rip into my first target, which was previous day high, right? Now, once again here, coming off the day before, I am in complete, I want a monster trade mode, right? Because I don't recommend this to anybody, but I actually held through this whole pullback, right? Because what I'm telling myself here is we're still holding below a pre-market level of 457. I'm willing to risk X amount to see if we could get a move down to end of day, right? So this is really based on where I'm at as a trader. I don't like this sort of trading. I'm not exactly proud of this trade, even though I made a massive return on this trade, right? I'm still not exactly happy with the way I did it. And as we grow as traders, this is the sort of stuff you need to be able to see to be able to become better, right? Like you need to be like, okay, this was a great opportunity. This was a monster trade. But should I have really held through a 80-cent pullback? I mean, does that constitute, is that a behavior that's going to lead to consistency, right? You need to ask yourself that. Maybe if it was a runner, right? There's a bunch of different scenarios, right? So I'm not going to exactly say this was bad, but this is something I'm working on and I don't want to continue to do it. But that was the trade I took. And that was the only trade I took. And go ahead, Darren.
Josh, I want to say something about this trade, this short off of open print, because and if you could just zoom into the 1 minute. I don't often trade on the 1 minute, but the 1 minute explains it really well. So
I'm going. Yeah, right.
So it is dangerous to make plays when the market is falling like this. Yes, we did see a little break of structure there, but do you see that little buying off of open print? There's like there's a wick off the bottom of one of those candles,
right here.
Right at 10:05, and then you see a little green bar ignored.
Right here, so yes.
There's a bunch of buyers there who got long, hoping, without real confirmation, they just got long.
Yeah, they were going to come back.
They're trapped.
Yeah,
they're freaking out right now because they're indefinitely in losing positions. So when you see the market go back and revisit those buyers and reject, and you see that big wick forming, you can be sure that those buyers are stopping out.
Right.
If they're there, they realize what's going on. They want to get out because they've realized that conditions are changing. So, yes, this is on the 1 minute, and I don't often watch the 1 minute, but this exact stuff happens on the 2 minute and the 5 minute. So if you can see a GBI, a green bar ignored like that at a critical level, and then you see a retest, even if it's a quick one, you can be sure there's buyers stopping out. And if they do that, that's confirming conditions. That's confirming that conditions are still bearish. And, if you want to get short, you have a great stop. You have a great stop loss. At that GBI or at that critical level. So, it's not the smartest, but I always like to think of it like that. Like, think about people who are stopping out, and if you see them stopping out, boom, there's your confirmation.
Yeah.
Just go with them, and you know where your stop is.
Exactly. And that you're 100% right. It's like, you can't beat yourself up too much, right? The market's going to just present opportunity. As long as you're controlling risk, you're fine, and that's where we get a lot of more benefits as trend trading traders, because when you're trading with the conditions in the market, you're trading with trend, you're going to be able to go, okay, right now sellers are in control. I know this because this daily time frame supply was rejected. Beautiful lower high off it, right? The break, the lower high retest right off the level to a cent is just insane. A perfect sell, break of structure, bullish structures broke.
Yep.
Now we're knifing into the open. And like you said, we get this green bar that's completely ignored, meaning there's no follow through after break, little retest or a little hiccup, and then massive selling coming through. If this is your way of going, okay, I'm going to enter the trade and just put my stop above this candle, no doubt. There's no right or wrong way to trade, right? It's only make consistent behaviors, right? Control trading errors. So, yeah, I 100% agree. 100% agree. And SPX, as you can see over here, a little different retest of the open, but break. Isn't that crazy? Insane. Look at that. Break, retest, boom, sell off, gap fill, done, finished. Your audio is getting a little funny, Darren. Yeah, just so and then there's one more thing I want to point out about this day. Is end of day right here on SPX. We rip right into it. Now, going back to the short play I was in, I was like, okay, we ripped right into end of day. At what point is this no longer quote unquote holdable? At what point would I not want to continue to hold onto this short play? Right? Like, and for me, it was this level, right? So we found this level on SPX. Where is it? Right here. It's from previous price action. It's just crazy how like these levels just continuously pop up. And I like to look at them as just like pictures. Market paints pictures at these levels. It's our job to understand them. So as price rallied right to end of day and you hit your target, it's completely fine with getting out of that trade. And then price comes up, breaks this level, and does a really nice retest. This is literally, I'm going to show you guys on the 2-minute how I do this. This is my main way of profit taking. We're breaking, we're retesting. We're breaking, we retest, bump in the end of day, trim. This candle, we break above that little swing low. We are now out of the trade. Structure has been broken. Done. This is the beginning of a possible shift in the conditions of the market. Once again, I'm not willing to see or I'm not willing to risk 20, 30, 40% of my profits here to see if this continues to go my way. And now I'm more objective to the shifts in the market, right? Because check this out. If this is where I'm stomping out of my short, does it make sense to start entertaining longs? Absolutely. Conditions are shifting, right? They're changing. It's super important to be able to be like, okay, lower low. Now I need to see another lower low. Instead, we get a higher low. This is telling us conditions are shifting, right? Perfect move up into this level. Oh yeah, this was my next trade. Perfect move off this level. I literally captured a 30. It was like a 65-cent move on SPY up into 456. But I traded on XBX. This was literally a 27% return. This is what we call base hit. This is what we call just extracting money out of market by understanding the conditions of the market. Really, I was really proud of this trade right here because I didn't hold it to see how long it went, right? This was very structured, simple. The shift, I identified the shift, had a clear area to stomp out, very important. So that was Wednesday, which leads us to Thursday. I did not trade well Thursday. Did not trade well Thursday whatsoever.
No, me neither.
I took 2 losing trades and called it a day. And I want everybody, once again, like we were talking, I want everybody to be aware of that. Now, let's bring it back to if I took profits based on structure, these trades would have been fine. So let me see. Notice this level right here. This blue line all the way at the bottom was that level we caught this massive move off of, right? So I'm watching this level at not really a critical level, but still I'm looking for, and look at, you kind of get a similar first rip. But anyways, I'm looking because as we're selling off in the beginning of the day, I let that level keep me from playing this short. And look at that short. Beautiful short, but there's a couple reasons I didn't like that short. Beautiful break and retest off open print. This is our edge. I didn't like it because end of day was so close, right? So once again, risk reward. I wasn't willing to put on risk here to capture a $5 move on SPX, which is like a 50-cent move on SPY. So I was like, okay, I'm not really willing to do that. Next, we continue to sell off, and then we get buyers here. And then we come up and retest end of day. This was my first trade of the day. Went long. Notice, below open print. Going long against open print. I do not recommend this unless there is a valid reason. The reason it was so valid this day is because open print and previous day low were the exact same. So, and we didn't long below open print. We longed at it. So that's the difference. I longed below open print, and you can see price rallies in the open print. Now, if I was able to go, okay, we bump my stop up to lock in profits, that would have been okay. But I didn't want that. I wanted a monster trade. I wanted a big trade. I didn't want a 12% trade. I didn't want a 10% trade. I wanted a 40, 50% trade, and I paid for it. Bam. Right? So this may be something you guys are going through, right? Maybe not as similar. Maybe you're associating a winning day with other things. I just really need to stress the fact and how important it is for you to dive into where you are failing. What is your root cause? It's one thing to trade. It's another thing to build consistent results and start to hit 100 grand a year, 200 grand a year. Look at these traders on Instagram making 3 million a month, right? These guys, they're able to take a trade and bump their stop up and only make 10% because they're not attached to the outcome. They're process oriented. They're process driven, right? It doesn't really matter the strategy. It matters how you think while you're trading it. So, it's just I really want it to be the theme of this webinar is figure out why you're taking the trades you are. Are you trying to satisfy an itch of being right? That's a big one for me. I want to be right. I feel like I've done a lot of studying and trying to learn a lot of edges and strategies and psychology. So I feel like this should pay off via dollar sign. That's not how it works. You must focus entirely on your process and dive deep into your Goliath, into your demon, which is keeping you from consistency or from just better results. So that was my first trade. And then my next trade was once we finally got above open print, I put on another long on this candle, stopped below it. Good news is I did not let any of these trades go out of hand. I shut them off very quickly, locking in profits locking in small losses, which, again, guys, is the goal. You know what I mean? As long as you can follow your process and not take heavy losses, you're going to be ahead of it's 90% of the battle. There's 4 outcomes to every trade. Win big, lose big, win small, lose small, right? I guess you could throw break even.
Not lose big.
Yes.
Break even.
Yes, exactly. As long as you get rid of lose big, you're already millions of miles ahead of the curve. So, and I couldn't.
Yeah, I also took that long there. And then quickly I realized that was liquidity, and it didn't really look like liquidity just because it was that close to the beginning of the day. But I saw it chopping back and forth, moving up, and I'm like, you know what? That looks like liquidity. As soon as I saw that, I set my hard stop very tight. It knocked me out, and I was done. Yeah. So I didn't. I think the important thing is, be able to recognize when things are turning against you. You don't have to hold on to it and it become a really, really painful loser. If you already look like something's moving against you, move your stop up tighter than it would have been,
Yeah.
There's no need to hang on and think that, things may turn around. Especially when you're seeing signs that things are going against you, move up your stop.
It's so crazy though, right? It's like something so simple becomes so hard. It's something so simple Move your stop up. Don't put yourself through it. It becomes so hard, and it's like you must figure out why that's so hard for you, right? Like this is something I battled with for a long time, right? I could not accept being wrong. I put so much significance on one trade. I put so much significance on the outcome of this trade. Oh, I made 200% yesterday. Today I need to make the same, right? It's like we must dive into why we think like this. And we must de-link, right, the outcome of this one single trade to our happiness or our accomplishment. Because once we can do that, we will stop making those shitty trading errors that are costing us our dream. Like, it's literally like, how many of us go through these dumb trading errors over and over and over and over? It's like they won't go away until you can conquer your mentality behind trading. And that's why I'm going so hard on this week, is because I truly believe this is an issue that is standing in the way of exactly who you're trying to become. Like, and I know it sounds so simple, just accept being wrong. But it's like, no, we must look at this as, hey, I can't control price action. I can't. Only thing I can, which means I cannot control making money today. All what I can control is how I approach the market and why I'm taking the trades I am. I can only control how I do this. I can't control price. So, I mean, look at Darren. We could not have came up with any more analysis that would have proved that buyers were not in control. Previous day low defended. End of day defended. Open print defended. That's 3 critical levels. That same methodology made me over 100% yesterday. So it's like there's nothing else we could have done to make money on this trade. The rest is in price action's hands, and it just decided not to work. So, like, once again, we cannot base the outcome of this trade. We cannot link it to our worth or our how we feel about ourselves. We have to stop doing that. Until we can stop doing that, we're going to experience I'm going to move my stop down to here. Maybe I was right. It just hasn't happened yet. How many times did I say that? You know what I mean? Maybe I am right. Maybe it just needs to go a little longer. And then instead of making 10%, you lose 30. And then down the road, do that enough, and it'll cost you your dream. It'll cost you your consistency. It will cost you your ability to level up as a trader. So, I just wanted to touch on that. So, I mean, then I took one more trade, which was, where was it? It wasn't good at all. Actually, you know what? It wasn't bad. Where was it? This trade right here. We had price come into this level. Where was it? This one. Okay, this is where I went long. So I went long. I really don't like this trade. I really don't like it. But this was my inability to understand that buyers just weren't here. And then once we get a little bit of buying, right, and we come down, get a little consolidation, I go long, stop below this level, and then we break right below it and stop me out, right? So, and then the market ends up rallying, right? And this was the trade I was going for. And it's like, hey, listen, once again here, did I stick to my rules here? I mean, there's a couple I broke, right? I didn't get a clean break and retest off a critical level. I wasn't trading with market conditions, right? So now I dive into my journal and go, okay, where did I go wrong here? I must understand the awareness. I must start to understand why I'm making the decisions I'm making to become better, right? So I don't care if anyone out there is, I want to, like, we all make mistakes. It's our job to figure out where we're struggling. So that's been a big one, is like figure out why you're making the decisions you are, and then dissect them, and then you'll start to see so much more much more consistency. It's it's one thing, right, to be like, we're disciplined, right? Like, and it's like, no, we have to create discipline. We have to earn discipline. Darren, how'd you say that before we started? It's one thing just to say.
Oh, yeah. So I mean, everybody says, you need to have discipline in your trades. But like until you realize what it actually does for you, it's not going to mean near as much. So I was reading The Disciplined Trader, and he basically goes over and he says, the more we can trust in ourselves to do the right thing, discipline, then the less mental capital we have to allocate towards thinking of all the ways in which things could go wrong. So that's doubting ourselves. Like if you without discipline, you have to think of all of the ways that you have to protect yourself because you're not following your rules.
Yes.
So now we can focus our attention on the subtle relationships in market behavior to learn new things and become a better trader.
Yes, exactly.
I thought that was really, really powerful.
And the reason why is because it's one thing to say we need discipline. It's another reason to understand why we need it. Discipline keeps our minds open to the correct opportunities in the market. Discipline keeps us from making stupid decisions that lead to failure. Discipline keeps us from not just scratching the itch because we want thrill today. You know what I mean? These are the reasons why we fail. It's because it all comes down to excitement, wanting to feel good about ourselves, and just like we're conditioned to think our dumb behavior actually worked. It must have worked sometime for us to think it works. So it's like, we have to build that. Friday, I did not put on a trade until I'm gonna run through my trade real quick, and then I'm gonna let Darren take the mic and switch over because he did a phenomenal job breaking down this day. Basically, the trade I took was off end of day on SPX with an upside target, and once again here I locked in a beautiful trade up into the previous level from this day. And what I want to touch on here is I avoided all bullshit, meaning I could not. This trade in the beginning of the day was really nice on SPY. It was a beautiful break and retest off open print. I avoided it because I didn't like the how close end of day was, even though it was a really good trade. And then I didn't like the short play, so I was really patient, and that was my goal because Powell was speaking. Powell spoke. We got buying. Right. And this goes back to what we were talking about with finding a critical level. Right. So my critical level was end of day. Look at this. This goes back to the importance of pre-market plan. So this level on SPX, right, it's on SPY as well, but it was a massive resistance throughout the whole week. Look, going back here last Wednesday, on Tuesday, Thursday, Friday, this level was tagged 4 out of the 5 days. Right. So going into this day on Friday, I'm going, hey, whatever happens at this level is going to paint the picture, and whoever defends it, I want to trade with. And it lined up as end of day. Crazy, unbelievable. So I'm like, okay, this level has importance. I'm going to trade off this level. That was my goal. I wanted to stick to my pre-market plan. That was it. So I was really patient. And that makes sense of why I didn't want to play longs up into it. But then we got that beautiful break and retest off it. This is where I was willing to put on risk, and caught a really nice move, rather quick move up into my target, booked it, called it a week. So that was my trade there. So
yeah, I love that. This plan on SPY, although it looked quite different than QQQ, like I came up with a plan on QQQ, like primarily that's the one I traded. Actually, I made one trade on SPY, but it was for a different reason. But then when I actually went back and looked, and I saw that SPY broke out of that big channel, it was just crazy to me because I saw that same channel on QQQ, but I played it in a completely different way. But it just goes to show that, they can be doing different things, but you can still use the levels on both of them.
Yeah.
Just because they're not doing the same thing doesn't mean you have to sit
it's
back.
Not necessarily
they're
bad.
not agreeing today. I'm not trading.
Right. Right. That's a very good point. Very good point.
Because we talked about this, Josh. How if you look at too many things, you'll find reasons to not trade.
You see nothing.
Like if SPY is respecting the level and Q is knifing through it, you're going to be like, well, I'm going to wait till they agree.
Yeah.
Well, they could be both doing something that makes sense. It's just you're framing it in a way that you can't capitalize it on. You got to be aware of that.
Exactly. What's that saying? He who chases 2 rabbits catches none. It's so true.
Oh yeah, I like that.
Dude, it's so true. Like in going back to we start to associate good traders as we see everything, right? Like if you're looking at 8 different charts, you're going to lose. Like sometimes, right? Like you guys probably notice, I'll only be doing call outs on SPY, right? Like it's kind of hard for me to focus on both, right? And that's fine, right? There's nothing wrong with that. That's why like in the middle of the day yesterday, I'm like, oh, meanwhile, QQQ is trading in perfect Thursday. I was like so focused on SPY because I've been trading SPX lately that I completely neglected QQQ's beautiful bearish structure on Thursday, right? So it's like, it's I highly recommend once you do make it like see something, I would just focus on that one. Like look at this. I would have never considered longs on SPY if I looked at Qs for 1 second. You know what I mean? So but
yeah. You know what's crazy about that too? Go back there, Josh. On QQQ, those 2 retracements, I don't know if anybody watches the fibs, but that hit the 50% and the 60%. That first pullback hit the 50, and the next one hit the 60. I don't often use fibs, but I was just doing some research, back testing, and I saw that, and I thought that was pretty cool.
Yeah.
I'm going to try to use fibs going forward. Obviously, it's important how you use it. Don't use it and get frustrated when it doesn't work, but it's just another tool in the book that I haven't really been using. So.
Yeah. And just real quick here, like QQQ, knifing below previous day low, bearish conditions, right? Like yes, you could make money if you went long here, but do you really want to trade against sellers? No. Like, you know what I mean? I love seeing this. This just validates everything we do here. Is like, I am bearish until otherwise. And then structure forms. Look at that, dude. Just beautiful. Beautiful. Okay. So
yeah, do you want me to share my screen and just go over my trading view really quick?
Yeah. I'm gonna click.
I know we're kind of close to an hour, but but I do want to show my trades real quick.
Yeah, go ahead.
Why can I not see trading view as one of my options?
You should be able to just click your whole screen. If you you see what I'm talking about? There you go.
Let me know. You seen trading view here?
Let me see. Yes.
All right. Okay. So this is SPY. This is the channel you were talking about. 456 was the top, and it was coupled with end of day. So that was a perfect long. I wasn't even watching this. What I was watching on SPY though was this 455.25, and what I'll do is I'll zoom into the 2 minute.
You got 2 minutes on trading
day on Thursday. We saw like intense volume right around this specific level. So I drew a level there, and I was like watching for buyers to show up here. That's exactly what happened. So my first trade here was to play with those buyers that showed up. Now what's crazy is QQQ had that same volume, but it absolutely broke through this level, like extreme weakness. But I didn't let that stop me from making this long play because this was in my pre-market plan and it hadn't been invalidated. So I had to take it. The QQQ was bouncing off its own demand, but at the same time it broke it. So that's what I'm talking about. Where like, don't look for reasons to not take your trade because you're always going to find them. Like if this is your pre-market plan and it's paying out, you got to stick to it. And so that's what I did. Did I take it long at the very bottom? No, I waited until we broke open print with strength, extreme type risk. That's where I got long, and I locked in profits pretty quickly.
Nice.
The way that I did it was
nice.
As soon as I got this big green candle, I moved my stop up to break even.
Perfect.
And then it went up even further, and I moved my trailing stop. Well, I didn't have a trailing stop; it was a hard stop to my 1 to 3 risk to reward ratio, and that's where it kicked me out.
That's
so
beautiful.
I made 1 to 3 risk to reward on here. It wasn't the biggest move, but I think that you need to, if this is your pre-market plan and it played out and you actually took the trade where you said you would, you have to reward yourself.
That's a win.
You can't, it's a win. You can't let that trade back against you and then turn into a losing trade. Like, at least give yourself something,
Yeah.
So that's why, I started to do this thing where I lock in 1 to 3 at bare minimum. And then if it decides to rip up above it and turn into a bigger winner, that's cool. But, at least reward yourself. So that's the play I made on SPY. Trade 1, I think I made like 35%. And then Qs, Q's had its own channel. So we had a channel going from 391 down to 388. We were trading within. We broke above it, came back in. We broke below it, came back above. So if we respect to the downside here, I'm playing short to previous day low. So that's one plan. Plan B is if we go back inside this channel and I see support at this bottom level, I'm playing to the other side of the channel, either previous day high or this 391 level. And actually both of those plans played out, and I took it both ways, which I'm really happy with. It was in my pre-market plan, and this trade right here, it was small, but it was my plan. I played off a critical level, pre-market low.
Bam.
That was my risk right there. I locked in, I think it was like 35%, and then another play off open print. So I played SPY off open print earlier in the day, and I played Q's off open print later in the day right here, and took it up to pre-market high, and also locked in. I think it was like 1 to 4 here. But this is what I'm talking about, where you make a pre-market plan and you're completely objective. Like, you will play it either way. I really felt like I was free of bias this day. I wasn't sitting around hoping the market would go down. I had.
Oh, we lost your audio.
And
oh, there you are.
What's that?
Your audio was just cut out for a minute, but yeah,
my bad.
No, that's okay, bro.
But yeah, this is the trades that I made, and I'm really happy with how this went. I attribute it to my pre-market plan and coming up with a solid if-then statement. I wrote it all out in my OneNote, and
traded.
And did I hold it all the way until previous day high? No, there was a perfect break and retest off of end of day. But I think what's more important is I had my risk to reward forefront in my mind. This is what it takes to bring me to consistency, and I need to lock in that when the market makes it available to me.
Yeah,
so
exactly.
That's really, really helped me recently.
Yeah, I love your first two trades there. Actually, all of them are phenomenal. But what I love about your first trade and that trade on Qs is you're not only taking home run trades. You're completely aware of the fact that you're just trying to capture an imbalance in between demand and supply, or in between levels. That's critical, right? That is, you're approaching the day like, okay, I have a pre-market plan. I'm playing off these levels. If the market presents any opportunity for me to do this, I'm just going to do it, right? Like, we leave it too mysterious too much, right? You're approaching this completely structured, and your main focus, I heard you say like a couple times, is your 1 to 3 risk reward ratio. Now, the reason why you're saying that is because to become consistent, you must demonstrate your 1 to 3, right? So it's like, I like how you're putting significance on that instead of this going to be a home run trade, or, oh, I made 30%. Oh, I made 40%. No, you're going, no, I hit my 1 to 3 risk reward. Done. On to the next. That is exactly what you want to be doing, dude. That's phenomenal. I'm writing that down right now. That's something I want to see. Is more.
And I know we talked about it earlier, but I think for me, it comes down to how you define success every single day. And if you can define success as creating a pre-market plan, acting on that plan without hesitation or reservation, and paying yourself as the market makes money available to you, that's literally the game right there.
Yeah.
And I was really happy with how I did it. Did every day this week work out that way? No, but when it does, you have to recognize what are the specific things that helped you contribute to that success, and then replicate those in the future.
Yeah, absolutely. Really, dude, really good, really good. All right, guys, that's been the weekly recap. I hope everybody enjoyed it. I'm going to post it in the weekly recap session. And I hope everybody has a phenomenal week. If anybody needs anything, message me, contact me, Darren, doesn't matter. Everybody have a great weekend. Go through your journal and figure out where you're failing. All right, guys, I'm out.
Have a great weekend, everyone.
All right, thank you. Bye-bye.